Hi everyone. So I have a lot of my friends sending me message asking me about the Fruitas IPO. So I was thinking to do it because a lot of people who wants to do investment nowadays instead of spending, which is very great. And I remember like few years ago I actually have a blog about investment, but I wasn't really into it. I don't have time. I took MBA, but now I have time, so I'll do that. And yeah, for today we will start with IPO, Fruitas IPO. Why should you buy, or what's my recommendation at least? But don't take it, my recommendation is my own analysis why I will do it. It still depends on you. You have to make your own analysis out of it, but I'll just list down everything that I think, the reasons why I will or I will not invest in IPOs. So for IPOs, I usually just check 4 things. First is the company performance, because when you talk about IPOs, usually there's no market trend yet, so you wouldn't know what will be the take of the market. Because when you do stocks exchange, sometimes it's not just about the performance of the company, but the people's or perspective about the company. Like for example, Amazon, there has been negative income for like 7 years until it finally generated income, but still the stock price goes up because people believe in Amazon. When it comes to stock exchange, you have to do both fundamental and technical analysis for you to be able to actually predict what's gonna happen. So it's very how can I say it, unpredictable. A little bit predictable, but you just have to manage risk. So when you do IPO, then you have to analyze at least the business background, or how it performed. So let's take our laptop. Yes, so they have been in the industry for 17 years, 17 to 19 years, and so far they have 900 stores. So yeah, for 17 years reaching to 900 stores, that's a good thing. Yeah. And
I don't think they do franchising, so everything is owned by them. Yeah, aside from that, they were able to diversify to different. They have new brands like Buko Loco, Buko ni Frutas, Juice Avenue, John Lemon, Black Pearl, T-Rex, the original Jamaican Patty, and Juice Bar.
another thing for me to say about choosing investment is that if I actually buy the product, so for this in this case, like for Frutas, actually buy their mango shakes. So if there's like 5 mango shake kiosks in front of me, I will definitely choose Frutas. So that's a good indication for me, at least, because I trust their product. I trust the taste of that.
I love it. I kind of think it's really fresh, so I want that product. And for me, if they can get my trust and other people as well, so I think that's a good way for me to distinguish if I will buy a stock or not.
Another thing is that for a beverage industry, it's very hard to stay alive in the industry, because every year there's different tastes of Filipinos that we want. So I think the staple one is, of course, soft drinks, but every time there's a lot of new thing. You have to be able to be very versatile and adapting to the new taste of the people. And for Fruitas to be standing for 17 years in the industry, it means a lot. It means that they were able to understand what is the need of the people, what they like, the trend. They were able to follow that. So in terms of strategy, I think it's we'll go through the strategy later. But for me, I think it's a good indication. And they have a staple Frutas, but you know, when Buko was a hit, they moved to Buko, and now it's milkshake. We don't know what's gonna happen next. I think it's turning to avocado, but they also have avocado, so it's for me, that's a good one. So that's a plus point. So in terms of company background and performance, I think Frutas is a plus. So that's 1 point for them. Yay! Okay, the second thing that I usually consider when it comes to IPO is the timing.
So, it's hard to honestly right now because I've been out of the country for 2 years and I don't really know what's happening anymore. But the thing is, just recently, like all of the IPOs went well because it's weird, you know. And November, I think it's kind of a hard month to do IPO as well because, you know, people are trying to sell their stocks because they're preparing for December. In December, you usually spend and you go on a vacation, you give gifts, so there's a lot of spending happening, and that's when people actually, you know, try to liquidate their assets. So for me, it's kind of difficult to say that November is the best time to do IPO. Honestly, I don't think I ever bought IPO during November, but because of this last 3 failed IPOs, it might be a good way or a good timing for Frutas to, you know, survive the market, the stock market, because it's as compared to the other IPOs. Frutas is famous. It's been there for a long time. A lot of people knows it. The market knows it. So I think it could be a redeeming factor for the PSE to actually do something. I mean, Frutas could be a good way to, and I'm not sure if there's another one doing IPO this year, but hopefully Frutas could take off this time. So, but in terms of timing, I'm not sure if it's
the right time to do IPO. Maybe it's a negative thing for me. They try to liquidate during this time of the year, but we'll see. Maybe, you know.
Third, you have to understand, or you have to read at least the prospectus. The prospectus is in the link below. I'll put it there. But the things that you have to read in terms of prospectus is first the use of proceeds, and second the strategy. So it's linked actually. Because as an investor, you actually should know why you're putting your money in a company. So it's the same way. You have to feel that it's your own company, because as a shareholder, you can actually vote who's going to be the president. You can actually join the shareholders meeting. They do that annually. I suggest you join. They give a lot of freebies there. I love freebies and free food, so you know, you can join that and you can ask any question. So it just feels good to be part of a corporation. You should at least feel that once. And you should feel that, you know, your money is invested correctly.
So, the use of proceeds is very important, because that's when you think of growth for the company. You actually put your money into a company because you think it's gonna grow. So if the money goes to 100% paying off debt, I'm not sure, because I don't know where they use that debt. And even if they show the financial statement here and their projection, they can actually, you know, I do projections quite a lot, and I can do whatever I want in projection. So it's very important that the use of proceeds is more into growing than paying off debt, because, you know, it's just like you just help them pay the debt, which is not good. So for Frutas, let's read. For those who are tamad and doesn't want to read, I suggest just read the first few pages, because they usually, you know, summarize it there, so don't worry. So for example, this one, they just mentioned the competitive strengths, so you can.
They have a strong and broad brand portfolio, which is correct. Multiple store formats as a sales channel, which provides flexibility to tailor stores to suit needs. But anyway, there's a lot, so you just read it, no? Yeah, it just says that, you know, it's scalable. It's good because it's growth, no? You can invest. They have a proven track record, which is very important. Highly experienced and nimble management team. I don't know them, but I think they are, because they were able to withstand the beverage industry, which is so hard. So this is very important, the key strategy, future plans and project, okay? So first, pursue aggressive network expansion to take advantage of Philippine economic expansion as well as rapid urbanization of regions outside Metro Manila. So as mentioned earlier, their strategy is to focus on Metro Manila or metropolitan areas. So because there's increasing, network like Cavite, Laguna, those things, those areas, they wanted to expand in those areas. So that's one thing. Of course, that's a good thing too. Aside from that, they can also expand in tourism spots, but it's not yet here. So that could be in the longer time period. But I would want them to, to expand on tourist areas like Coron, El Nido, Siargao. Love it. Anyway, so they wanted to increase same kiosk sales growth. They want to further enhance operations to improve margins and retain competitive product prices. Yeah, so it's a good thing that they wanted to stay in the price level, because that's a good strategy, especially for buyers in the industry, in the beverage industry. The more expensive it gets, you get the less appetizing for us. Innovate and introduce new concepts to satisfy evolving consumer tastes and preferences. That's correct. That's what they've been doing for a long time. Acquire other food service brands and businesses and expand in new formats where our cost-efficient model can be replicated. So, as you can see, they also wanted to buy other brands. So, Jollibee's strategy, if I cannot beat you, I will buy you. Something like that. I think that's what they wanted to be. They want to be liquid in a sense that they can buy new brands. And because they've been doing a lot of brands for the past years, then I would assume that their business development in terms of analyzing which brand will work or which one to buy would be good. That's just my analysis. They wanted to diversify distribution channels. They want to expand the food park business as another growth area for our company. So there's a big boom in the food park industry, so they wanted to enter in that. And if you are a fan of food parks, then you should buy, because you're one of the customers and you would know if it's a good thing or not. Honestly, I've never been to one, so I cannot say anything about that. They wanted to invest in training and development of human capital, which is good, because if they invest on people, that they are training them, then they will be better, and better people to handle the money, your investment, right? So I think it's a good strategy, because they hit 2 points. They wanted to increase growth or sales. So if they increase sales, of course the return goes higher, and at the same time they wanted to lower the cost. So in that sense, the margin goes up. It's like
It goes like this, right? Like CoverGirl. So it's a good thing, because it means that they wanted to increase the value of your money, and it's gonna return to you. So that's one. That's a plus. So 2 points.
Of course, you have to read is the use of proceeds. They put it here. And then we will go to the details later of more technical stuff. So for the use of proceeds, they said that first they wanted to have first, store network expansion and improvement of stores. Second, commissary expansion. This is the Third, food park business expansion. Fourth, acquisition opportunities and introduction of new concepts. All for growth, and one, repayment of debt and of debt obligations. So that's the least one, but we have to check. I will check what percentage of the money that they will generate they will pay out for debt, so we know if they're just putting it last, so it doesn't show, it doesn't glare up and put question mark on us. We have to investigate further.
Okay, so looking at their financial statement. So first,
the sales went up, but their cost for selling and distribution expenses was doubled from 2017 to 2018. So that's why. Yeah, it's a big question mark. Their general and administrative expenses also went up.
Almost twice, not 100%, but around 80%.
So their net income actually went down from 172 million to 100 million from 2017 to 2018. But half year of 2019 compared to half year of 2018, it increased twice already. But that's a big question, why their selling and distribution expenses went up. So let's investigate further on that. Well, in terms of their assets, the cash went down, so we will see the cash flow later. That's because that's very important as well. Non-current asset went up, doubled from 2017 to 2018, and it's because they increased the property and equipment. So they invested on property and equipment.
So okay, this is kind of interesting. When it comes to liabilities,
Their current liabilities from 2017 was actually around 60 million, and then it jumped to 405 million on 2017, and then 497 on 2018. Why? Because they suddenly have current portion of notes payable. Okay, so it's more notes payable. So for me, it doesn't look good in terms of cash management because they invested, well, it's not, sayang no, kasi nice yung strategy niya in terms of sales and everything else, but the finance kinda, I don't know. Anyway, so that's for their current liability. So imagine 497 million liability. Sobrang swerte naman ng bank nito. Laki ng interest nila. And then for the non-current liability, it's 33 million. So
you see the mismatch in terms of financing and investment.
I don't know. They have a good historical financial statement for them not to be able to get the long-term financing, which is weird. Or maybe they never explore that. Yeah. So anyways, let's go to the more important thing. If you're finance, you should know that you should always look at the cash flow because that's where you can see how they use their money. If it's done properly, yeah, because it's your money, you have to know. So their depreciation went up really high. It's because they invested in equipment, and that's okay. They also increased their receivables. So well, they increase their sales, it might be that, it's organic, but it could also mean that they don't have good collections anymore. But I think it's because of this sales growth, which is good. From 2017 to 2018, the cash flow from operation is the same. So it means that there was no growth for 1 year. And that's an indication of being stagnant. Like Boston Consulting Group matrix. They have star, they have question mark, they have dog, and then they have cash cow. So I think it's moving to the cash cow. The fact that it just retained the earnings for 2 years. But good thing is that for 2019, just looking at the mid-year performance, it actually went up like twice. So it means in terms of operations, it was good. So when they invested 2 years ago with the equipment, now it's generating new income. Okay, so now we move on the investing activity. So ito naman yung you check this to know where they invest. So as you can see, super laki ng jump from 2016 to 2017 from 6 million of property and equipment. It jumped to 87 million. And it went even further in 2018 to 146. So it seems like they are investing on property and equipment. Just along this side, when I was going to Manila from Santolan, I saw the Fruitas building. If it's the commissary, if they're investing in commissary, then that's good. Yeah, and their intangible assets also grew up. It's probably because they purchase brands. That's the only way. Because you're paying for a brand, for IPs, intellectual property, something like that, royalties. So that's their investing. So it was negative because they invested. It's okay lang if the investment is good investment, for growth. What we don't want kasi is decline in the operations because that means the operations cannot sustain the payables or anything. So now we go to financing activity. So this is how they manage their cash. They actually finance using short-term financing. As for example, their notes payable is 247 million. If you look at the investment from last year, it's around 201 and 7 from 2018. So technically it's so not correct to finance using short-term loan as short-term financing for long-term investment, which is not aligned or not mismatch in terms of finance. And in their net cash for 2018 is actually negative. So even if their net income is 100M, it's actually negative 33. So nabawasan pa yung cash nila. They are very liquid. They have 260 million cash sitting there, maybe waiting for the investment. Yeah. And then they finance their long-term yeah, in terms of cash management, they are not very good. That's all I can say. But I think that's why they are doing equity financing. So instead of refinancing it for a long term, they instead chose to do equity financing, which is weird because usually doing IPO is more expensive than debt financing. But let's see. It's not. I mean, it's a good and a bad way in the sense that one issue lang for me is that they don't manage their money well. They are very good in terms of strategy, sales, growth, and everything else. But the finance part, medyo questionable for me, coming from a finance background and doing corporate finance for the long term. See, wait, let's find out na yung for the use of proceeds finally before we close this. Okay, so that's just my perspective of coming from an outsider looking at the financial statement, the cash flow. So if you go to the prospectus of page 30, and then you can see the use of proceeds, you can see here that the use of proceeds, first, store network expansion and store improvement, 59% or 586 million will go to that, which is 59.4%, which is super good. For me, that's very good. They're trying to invest on expansion, so their sales will go up even further. Commissary expansion, 5%. So the thing is, if you grow your network without expanding your commissary should be not 100% utilized. We'll see. Expansion of food park business, 5.1%. Acquisition opportunities, around 20 to 2021, 15.2%. And the debt repayment is 15.2%, which is 150. I think this is the short-term debt that they had. Using it for 15% debt repayment, for me, that's a good thing. My suggestion lang for Frutas is for them to train or to improve their cash management. Kasi in corporate finance, long-term investment. So, hala, I don't know na. A while ago, I was like super sure. But use of proceeds, +1. It's a good thing. Strategies, yes. Just a little bit concerned for me is how they manage the money. But it seems like I think I'm still gonna buy it first because I like the product. Second, I believe that the sales drive is very important. So if they can drive the sales, very good. Because that's harder. And they've shown that for a long time. The strategy is good. In terms of cash management, they can improve. Yeah, it's a long-term improvement process. So on company, background, and performance, good. Strategy, good. Use of proceeds, good. Timing, no. Points of improvement, cash management and corporate finance, yeah. But at the end of the day, I think it's a good investment, especially if you're looking at long term. Don't expect it to increase in the short term. If you want me to create videos more about investment, then please subscribe and hit the bell notification there. Very blogger, no? And I've been doing stock investment for maybe more than 10 years now. So, yeah, and I do all sorts of investment like real estate, insurance, UITF, like direct business also as well. So, yeah, I can share a lot of insights about, finance and everything. And that's it. So, thank you. And I really hope I help a little bit. At the end of the day, it's your choice. Just for me, yes, I'm gonna buy. But if it's your choice if you want to buy or not. Depends on how you take the information I gave you, because stock market is a free world. You can think whatever you want. At the end of the day, it's a consensus. If 80% of the investment population thinks that, then that's where the market goes. If 20%, maybe I'm part of the 20% that doesn't, that believes in it, then it what happens next. So yeah, I hope if you have also comments, or if you've read the prospectus and you think I missed something, some information, just put in the comment, because maybe other investors would need that information, and it's nice for us to share our insights, our ideas, right? So thank you, and I hope. Oh, by the way, if you want to invest in the IPO, you should have a stockbroker account. So me personally, I use Call Financial, First Metro, and BDO. For IPO, I think it starts on Monday. So if you want, you have to start fast. And I think the fastest one, in my experience, on opening an account is BDO Nomura. So just go to your BDO BDO branch where you open your account, and then tell them that you wanted to open a stock account, and then from there you can click and then ask them how to invest on the IPO, so they can tell you how. But it's usually just that, and then you just have to transfer everything online, your money, and then because in IPO it's usually draw lots. If you want to invest on the the LSI, Local Small Investor Program, I think you should have Call Financial. So before, it took me I think a week or two before I was able to open my account in Call Financial and First Metro. So just ask how to do that, because if you do LSI, you can actually invest on bigger you have bigger chances, and you can invest bigger amount, because if you just invest on your normal stock accounts, you do draw lots, so it's luck. Sometimes you get a share, sometimes not. So if you don't plan to invest big, like for LSI, you can invest, I think when I read the Call Financial, I think it's up to 99,000 pesos. And sometimes if you do draw that, sometimes you just win 1,000 shares. So if you just want to try it. If you really believe that this is a good investment, then you can go for LSI, but you should have Call. If you already have Call and you don't know how to do that, I'll put the link below. You have to because it will tell you how to do that, because you have to have an account in PSEC. It's funny, because before I have to line up in TechType just to pass my application, but now you can do that online, and then you can just pay last time in home, I think I paid in PNB. That was amazing, because everything is online now. Wow. So do that. And something else. What else did I miss? So if you have any questions about how to open an account or where, you can message me as well, or comment below. I can try to respond if I have time. Yeah, but anyways, so thank you and happy investing. I hope it's great that a lot of people now are smarter in terms of their money, and of course we will support that as well. So bye, happy investing. Don't forget to subscribe and hit the
don't forget to subscribe so I can share more information. Bye.